How much money would you have made if you had put $10,000 into Fiat, the YieldMax short coin option income strategy ETF, right as the market started to drop? Welcome back to the channel, guys. We're going to do this really interesting video. It's going to be different than the usual 10K invested because I'm only going to do the timeline since Fiat became profitable. I know it's picking and choosing, but I want to show how insanely profitable these can be in a really bad market. And Fiat, of course, the Coinbase stock has been dropping like crazy. For those of you that don't know, we're going to look at this. We're going to see Coinbase stock. We're going to see how Fiat has performed, see how the dividends have. We'll look at the drip calculator from the beginning and to just the most recent returns. And then we'll do our calculation based off those recent returns. So I hope you guys enjoy. If you guys are interested in income investing, in passive income, in making money in the stock market, you are in the right place. Don't forget to like the video and to subscribe so you never miss an update video. Thank you guys for watching. Let's roll that intro. So I recently did a video where I'm going to be putting out a series, probably a monthly video, on all the returns for the inverse ETFs that we've been tracking. And so Fiat is one of the higher distributions. It has a 143% distribution rate, which is absolutely insane. And the history is interesting. We're going to look at the dividend history, but I just want to go over the fund investments. So of course, the primary investment objective is to seek current income. That's what most of what YieldMax funds do, if not all. The secondary investment is to seek inverse, opposite, or short exposure to the share price of common stock of Coinbase, ticker COIN. We can see the net assets is 39 million, a little bit lower, but the expense ratio is quite a bit at 0.99%. It's not as bad as it could be. It's not as high, but that is very, very high for most income investor standards. So that's just the gist of it on the YieldMax website. We are going to look at the price history for coin and for Fiat, and let's see exactly how insane those numbers are. One really interesting thing that I did not expect is Coinbase has had a rough year, but Fiat has not been profitable this entire time. They were actually only really profitable recently. So if we go to the 1 year, we see it is down 21.44%. The last 6 months is down 10%. The last month, it's only down 1%. When we zoom out, we can see 5-year wise, it is down 50%. I can't believe I didn't buy Coinbase when it was in the low 30s, but I mean, it has fallen back. We're now to 175 from the 343 mark. So Fiat potentially has done well. I'm not really sure why it hasn't way outperformed just based off Coinbase's recent returns, but I'm guessing it's because at one point Coinbase was going kind of insane. So that is definitely going to factor in. Let's check out Fiat's history. So 1 year on Fiat is significantly worse, but remember, this is an income ETF. So this is not factoring in the dividends that are paid out at this time or distributions because this is an income ETF, but we're going to look into that. When we go to the 5-year zoom out, it hasn't been trading for that long, since July of 2024. So really, I mean, it started trading in the 20s and now it's all the way down to 8. But if you had scooped up some shares when it was in the 8 range prior and just sat and got some really nice dividends, that could be the way to play some of these. The problem is you never know when crypto is going to go insane and when Coinbase will shoot back up. It really depends. I'm no crypto expert by any means, but I think that there is a fair chance that when crypto runs and Coinbase stock goes up, it'll be hard to get out of Fiat in time because crypto, when it runs like crazy. So using Seeking Alpha's dividend tracking history, I really like their website. We can see the last 5 years. We really only need 1 year. It started trading around, what did I say, July of 2024, and it paid out under $2 a dividend, which was pretty insane at the time. Now, it has fallen quite a bit. We saw crypto do a nice run and Coinbase kind of follow it. We had a low of 55 cents paid out. Last month, it paid out 68 cents. This month, it paid out 92 cents. So I can only assume next month it should be on the rise as crypto continues to fall, as well as the rest of the market. What I like about this is it's relatively consistent monthly income. You just have to fear the price absolutely tanking, which of course we have seen since the inception of this fund. But if you're bearish on at least crypto or the market as a whole for the next couple of months, it might be a way to put some money in and just watch things drop. I like to use this kind of as a hedge. And so I'm seeing how this works out in my portfolio to make some more money with my money. And then as soon as the market flips, I'll probably sell out of all of these. So I will have to watch closely. And that is kind of a downside to these funds. You're not just going to buy them and forget them, or at least I'm not going to. Not financial advice. You can of course do whatever you want, but I don't think that's how these funds are made to be traded. So we're going to jump into the drip calculator and see some really insane numbers that I bet you're not ready for. So the first thing I want to show you guys is why I don't just buy these during any market, and this is why. This has absolutely tanked. it is down. I guess it's not as terrible. Total return is down 11.63%, but you can see at one point it was down over 40%, and it came back up now that the price of Coinbase has been going back down. So not great for sure. The difference between dividends reinvested and not reinvested is pretty, I don't know. You don't even really need to factor it in. It's pretty low. But let's run this calculation again. We're going to throw in a different date. So we're going to go February 1. We're going to go with 2024. No, we're going to go 2025 and see the difference that this makes. But again, I know this is picking and choosing, but I'm curious about how these funds really work and how they outperform in these bearish markets that we've seen. So that's why I'm choosing these specific dates. So like I said, you wouldn't want to just buy and hold forever. Maybe you would. That's not what I'm going to do. When we zoom in, say you had bought when the market really started to fall in early February of 2025. At this point, your total return would be 37.62% with dividends not reinvested and 34.01% with dividends reinvested, which is pretty crazy because we've only had, 2 months of dividends, and the total return difference is absolutely wild because as fiat is going up and Coinbase is falling down, those dividends are buying at lows, and it just keeps going up and up and up. So it might be something I hold for a couple of months. I don't know what this market's going to do, but this was really eye-opening to me how you can really quickly make a near 40% return at a time when most of the market is down 20%. Like I said, I really don't play with the inverse funds much because they really make me nervous and it's not my style of investing. But during these crazy markets, it could be a way to make some decent money while you're trying to keep your portfolio from bleeding out. Like I had some days, I think I'm down like 15% over the last 2 or 3 months, which is really hard to see. So being able to have a couple positions, and again, there's only 4 or 5 of these, being able to have some that are making you that income, especially if you're retired. Like I didn't even really think about that. But if you're retired and all of a sudden all of your income is falling like crazy, you put a bunch of money into these during a bad market and you're still getting the income that you need to supposedly live on. But I'm not retired. I'm not even close. Maybe one day. I want to know what you guys think of these inverse funds. Do you use these at all? Are they worth it? I'm really, really curious because the returns have just been absolutely insane. So I'm definitely going to cherry pick, and I'm going to pull this total return of 37.62%. We're going to use that in our calculation and see exactly how this thing could perform in the craziest of bear markets. So this is going to be very different than how I normally run these calculations because it is an inverse fund. So I'm going to start by saying this will be absolutely nearly impossible to happen. I don't think this will happen. It's just the market typically goes up. And so unless we had a near 20-year bear market, which would be crazy and unheard of, this fund is not going to do this. But I want to show you guys the power of investing in it for just a short amount of time if the market performed as it has been. So again, we've only seen about 2 months where it really has been really positive. But in that 2 months, in a full year, if we had a full year of this market, and you invested $10K, even at a lower yield than it has been yielding, because the yield is growing, of course, because fiat shares are going up, we can see the ending balance is $25,000. So after 1 year, you would make almost $10,000 in dividends, nearly recouping your initial investment. And with the compounding effect of the monthly, like I showed in the drip calculator, you would be sitting at $25,000, an absolute 154% return. Let's say something goes insane. The market does this for 2 years. 2 years. After 2 years, it's taken its sweet old time. I seriously can't even believe this. Also, a big factor, the annual dividend income was $40,000 moving forward. So we can see now, after your first 2 payments, your first 2 years, all of your dividend payments are $34,000, tripling your initial investment. Average return is still 154%. We now have $64,000 created from 10K in just 2 years. If anything, that would probably fix whatever your investments are doing in a terrible market just like this. And this is just one of these, right? So if you really hedged it and you wanted to try and play the market as best you can, which I don't recommend doing, to be honest. You guys know me. I'm a long-term hold investor, but it's just crazy. We have not seen this number popping up in this number of years for anything. So I'm only going to go to 10 years max because I don't think anyone's ever anticipating to have a 30-year bear market. I think even 5 years is way overdoing it, but let's see what the numbers do and how this is performed. As well as, we're distributing monthly, so we're factoring that in. Drip is on, and we have no taxes. We're not adding any more money to it. It's just our 10K. Just our 10K. We're not increasing the dividend amount. We're not increasing the share price, even though we probably should increase the dividend amount and the share price if we are in a 5-year bear market. But we're not going to do that. After 5 years, you have now hit $1 million. And that's what's absolutely so insane with these inverse funds is they perform so extremely well in such a short period of time. But I think in 5 years, the market would have to go to like zero for this to even be possible, or at least just Coinbase stock itself. But if it went back down to 30s, the $30 range from 170, I could see it making some absolutely insane money. Again, you're now at $655,000. That's just insane. $655,000. And our total return's 10,000%. So we'll do 10 years just for fun. I don't know what it's going to be. Let's see how bad it is. Your 10K becomes $110 million in the world's worst 10-year bear market, or at least 10-year bear crypto market, where Coinbase stock has gone to near zero. And again, this might not even be possible because the deciding factor is what crypto does, but what Coinbase stock specifically does. So as it falls, this could also get delisted if Coinbase was delisted. So your dividends are $70 million. It's absolutely insane, but it is really cool to see the performance that these have put on in this bear market has been absolutely insane. And I'm not telling anyone to buy it. Again, not financial advice, but it's cool to see that there are ways you can still make money and make really good returns in a short period of time when the market is really, really red. So I hope you guys enjoyed this video. Of course, I know it's not plausible. It's highly unlikely this will happen. I just wanted to show you guys how a 37% return in 2 months is absolutely nuts. And it's on the lower end of the calculations that we just did. So I will keep updating you guys on Fiat, on CRSH, on all the inverse YieldMax funds, how they perform in my portfolio, and the dividends they are paying out. So again, if you guys are interested, don't forget to like and subscribe. And if you enjoyed this video, there'll be more coming out just like it on the other inverse funds. But there already is a full breakdown on the profile of investing $100 into each of these inverse funds that I have up that I'll link right at the end of this video. It's probably popping up right now. As always, thank you guys so much for watching. I really, really appreciate it. You help the channel so much by liking and subscribing and sharing. For those that might be interested, we're all in this together. We're learning, we're growing our portfolios, hopefully even in these crazy red markets. Thank you guys so much for watching. I hope to see you in the next video.